Morning, everybody. Welcome to this session of Business Bitesize. And I thought this week we could talk about growth and growth options. So often when we are asked to get involved with a client, helping them with their business, one of the reasons for that is that they've had strong growth for a number of years historically, and then they've plateaued. So they've kind of got to a point where growth has stalled. So they're a reasonable sized business, but growth is stalled. And one of the ways we start to tackle that is just to have a look at what the options are for growth going forward. So this diagram illustrates that really well, I think. So initially we think about trying to sell more of our existing products into our existing market. So there's really two things we're thinking about here. We're thinking about our products and our markets. So what we're currently doing is selling existing products we know and understand, into a market that we know and understand. And the lowest risk way to grow is to look at how we can sell more of the products that we already have into an established market, a market that we're already established in. And this is often there where the growth starts to stall, because we get to a point where we've got a pretty good share of the market, and the higher the share of the market we get, the harder it becomes to continue to win part of that market. So it can be done, of course. There are ways of doing that, thinking about what competitors are doing, looking at pricing, looking at how we can add value to our product, is always worth doing. And there's other things you can think about. And I guess one of the really key things is that we know these customers already. So these are existing customers or customers in the same marketplace. So we pretty much know how they think and feel. So it should be possible for us to continue to grow the market. But we will get to a point of plateau eventually if we dominate. So an alternative then is to think about taking the products that we already have and know and selling them into a new market. So a new market might be a different geographical location, it might be a different demographic, different age group, might be a different income group. So there's lots and lots of ways that we can segment potential markets, and that in itself I think is a really interesting exercise to do. So segmenting the market is a good step. Then we can start to see where we might be able to identify new markets or new market segments that we aren't currently dealing with, and see how we can sell products that we already have into that market. So geographical location, lots of the businesses we deal with are in Gloucestershire, and lots of their market is in Gloucestershire. So it may be something as simple as looking to expand beyond that geographical location, but still selling the existing product. So another alternative is obviously to work with our existing customer base and the market that we're in, and introduce a new market. So this again is quite common. So we start to think about what customers are buying, what else they are buying, what other products they are buying, and whether that's allied to our existing product. So we can add that into our portfolio, introduce that, and look to sell that into our existing customer base and that market segment that we operate in. So again, quite a classic approach to growing sales. And then the final option is to introduce a new market to a new product to a new market. And of course, that is the highest risk option. It's called diversification. So what we're really suggesting there is we're starting with a product that's new to us. So our understanding, perhaps our efficiency in producing the product and delivering it is not as good as it is for established products. And we're looking to take that into a new market, which again, may be a market that we don't perhaps understand as well as we do our existing market. So there is risk associated with a diversification. So we would encourage people to look at market expansion, taking existing product into new market, and product expansion where we're taking new products into our existing markets. We'd encourage people to look at those options first, because they are simply a bit lower risk than the diversification route. So if you feel that your sales have plateaued, then this is just a good way of trying to break it down and look at what your options might be going forward, trying to develop some strategies for the favoured option. This is often where our corporate finance guys get involved actually on some of these. So some of the one strategy in terms of new product might be to do an acquisition, to buy another business with a product that you can add to your portfolio, or indeed buy a complementary business in another location that allows you to take the product that you already know, your existing product, and sell that into a new area. So there are definitely lots of potential strategies you can develop under each of those options. So a good way to think about growing sales if you think you hit a plateau. Thank you.